Is this one of the greatest opportunities of the year, or is this just another value trap? Well, Novo Nordisk has been cheap before and it just became cheaper and cheaper, right? We've been talking about Novo Nordisk when it was in $70, $80 as well. It was cheap back then, and now, well, under $60, it just became cheaper and cheaper. As you can see, the current drawdown, well, that's just above 60% from its peak. Year to date, it's down 35.3%, has a market cap of $284.5 billion, a trailing 12-month PE of 18.8 times, and a next 12 months PE of 15.6 times, with an average analyst price target of $101.3, representing around 90 to 92% upside from the price we're at today. So what do you think? Too good to ignore, or a value trap? Let me know down in the comment section below. Of course, on Thursday, the stock dropped another 7.6% on the, well, after the Eli Lilly news. So let's talk a little bit about that. I also want to touch a little bit on the Netflix earnings later in this video. Now, for those that don't know, right now, free cash flow margin for Novo Nordisk sits at 25.4%. It's an amazing business. I'll show you the difference between Novo Nordisk and Eli Lilly as well. If we look at the expected growth rate for the next 2 years, revenue-wise, 18.5%, well, EPS-wise, 21%. So, every other company that is expected to grow like this or has grown at these rates will probably have a PE in the 20s, and yet Novo Nordisk is getting disrespected. So let's talk a little bit about that. If you enjoy this type of videos, little the buttons, we'll really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And do check out FinChat down as well for 15% off. More on them in just a second. Alright, so on Thursday we've had Eli Lilly release this. So the oral GLP-1 demonstrated statistically significant efficacy results and a safety profile consistent with injectable GLP-1 medicines in successful phase 3 trials. So they said that the once daily oral pill reduced weight by an average of 16 pounds or 7.9% at the highest dose in a key secondary endpoint. So, of course, when we're talking about GLP-1s right now, whether it's Eli Lilly or Novo Nordisk, it's all about injectables, right? Injecting it into yourself. But the next phase, and I think that's where, you can add a couple of extra $1 billion on top of it, is of course the oral pill. Whether it's going to be a daily or a weekly one remains to be seen. But that's the thing. Daily or weekly, what would you prefer? Probably a weekly pill, right? Now you're going to say, yeah, it depends on how much weight I can lose and what the side effects are, right? If I only have to feel nauseous once a week versus once every day, then I'd rather take once a week, right? And that's the battle right now. Because Novo Nordisk, remember, back in January, Novo Nordisk said the following: they've successfully completed phase 1b/2a trial with this solution right here in people with overweight or obesity. And this is about the once weekly administration. So it's not like Novo Nordisk is just sitting around and not doing anything. No, they're also working on their own solution. In this case, not a once daily, but a once weekly. And this is also an oral pill. So yeah, to me, again, over 7% reaction on the downside today is, in my opinion, an overreaction, because when you're buying Novo Nordisk, you're not just buying the GLP-1 side of the business. Of course, that's one of the reasons why the stock has gone up that much in the last couple of years. But the business as a whole, as you will see, margin-wise, is incredibly strong. Now, of course, going forward, if Eli Lilly does come out on top and does come out first to the market with a great solution, oral pill that you take daily, and these are the results, and you don't have to feel that sick, right? There are probably still going to be some people that will feel sick. Then yeah, Eli Lilly, I do expect them to continue to dominate in that segment. But I still expect Novo Nordisk to also come out with a competitive product. So in my opinion, this is not going to be a one winner takes it all type of game. So if we go back on FinChat, which is a stock research platform, we look here at the segments and KPIs, which basically, this is something very specific to FinChat where they track company-specific metrics. So if I wanted to check, revenue by geography, I can just click on these things right here: Europe, Middle East, Africa, China revenue, rest of the world, US, or other North American operations. Well, we get this, and actually you can put it in the Danish currency or in USD. Let's put USD because most of you are from the US, based on my YouTube analytics. Well, we can see the following. US and North American are, of course, the areas where revenue has grown the fastest over the last couple of years. Then we can look at rest of the world, Europe, Middle East, and Africa, and then China, that has grown at a compound annual growth rate of 5.91% since 2019. Now, as you know, I've said before, China and India, those are markets where Eli Lilly and Novo Nordisk do want to grow more in the coming years. So these are some of the things that you can look at here in segments and KPIs. Of course, we can look at specific business segments like the GLP-1s, insulin, diabetes care, rare disease revenue, and all of that. You can look at all of that. You get a nice chart right here, nice visualization, and that makes every investor's life way easier. So if you want to try it out, new users will get 2 weeks of FinChat Pro for free. If you really like it, you want to upgrade, you can use my link for 15% off. Link is in the description and in the pinned comment. Now, if we look at what the market or the analysts are expecting Novo Nordisk to do in the coming fiscal years when it comes to free cash flow, well, for the next 3 fiscal years, free cash flow is expected to grow above 20% each and every year, basically doubling the 2024 free cash flow, basically, in 2027. That's pretty crazy. PE wise, trailing PE, that is, well, we are of course lower than the average. We've seen the growth rates in each of those geographies. We can also look at the growth rates for Wegovy and Ozempic, the big revenue growth drivers here. So I mean, this is quite incredible. Look at the compound annual growth rates for Wegovy, 236.2% since basically 2021, and then 98.1% for Ozempic since 2018. Incredible growth stories here. But of course, you might say, okay, this was great. This was in the past. We might not see this in the future, which I agree, which also means that you don't have to put such a high premium on this stock anymore. Yes, I agree with that. But then if we look at Eli Lilly and Novo Nordisk, the overall business, free cash flow margin and gross profit margin, well, believe it or not, Novo Nordisk at the moment is just higher than Eli Lilly. Gross profit margin is higher and free cash flow margin is higher. And even with the drop in free cash flow margin, of course, there was also a big increase in capex. But even with that 25.4% free cash flow margin, it still is higher than the peak here, 2021 Eli Lilly, 21.4%. So yeah, if I look at this business, if I really want to have exposure in healthcare, Novo Nordisk would probably be the name at the top of that list because of the value, because of the growth rates, the expected growth rates, and how cheap this thing really is. If you look at Goldman Sachs European Conviction List, the director's cut, you look at healthcare here, you can see Novo Nordisk sits on that list and they expect 91% potential upside in the next 12 months. Looking at the reverse DCF here, we can see based on these assumptions right here, we can see that to justify today's price, it will have to grow free cash flow each and every year, 4.5% for the next 10 years. Of course, I'm using this definition right here to get the terminal growth rate, the discount rate. You might say this is way too high. Okay, so let's say 3% terminal growth rate, 10% discount rate. Then to justify today's price, it will have to grow 9.5% each and every year for the next 10 years. I think it's possible. I think risk reward wise, it makes total sense. Now again, you're going to ask me, so why don't you buy this? Well, like I said, plenty of times, if I was interested in buying into healthcare companies, this would be it. At the moment, I'm not looking for healthcare exposure, but that's just me. I know plenty of people that do want this exposure. And yes, I do still think that Novo Nordisk is one of the best names out there. And I can also understand those that go with Eli Lilly. Now, if you purely look here at the technicals, let's say, we can see that right now the stock is around, well, previous resistance point at around $58, $60 or so. It can go lower, 18% lower or so, to reach around, well, $50, $48 or so, which was previously a double support area back in 2022. and well, twice in 2022, early 2022 and late 2022. Could we do the same thing? Remains to be seen. And right now on the weekly, we are also oversold. So what do you think? Novo Nordisk, huge opportunity, a value trap? Let me know down in the comment section below. Now let's talk a little bit about Netflix. So Netflix quarter here beats across the board. Revenue grew 12.5% year over year. Operating income $3.34 billion. Operating margin of 31.7%. Diluted earnings per share $6.61. Then free cash flow here of $2.66 billion. Forecasted revenue, well, year-over-year growth of 15.4% year over year. Operating margin of 33.3%. So a nice increase here quarter over quarter. They talk a little bit about competition, etc., but they did give us here an interesting number. We have a huge audience that's estimated to be more than 700 million people, with over 2/3 of them living outside the United States. No entertainment company has ever programmed for so many tastes, cultures, and languages. I mean, this is what makes Netflix really, really special. It's one of the first entertainment companies that really is global, that really has a worldwide catalog. Now, as for 2025, still guidance remains unchanged. Revenue-wise, $43.5 to $44.5 billion, assumes healthy member growth, higher subscription pricing, and a rough doubling of their ad revenue, partially offset by FX net of hedging. We're still targeting a 29% operating margin for 2025 based on FX rate as of January 1st, 2025. There's been no material change to our overall business outlook since our last earnings report, although at current FX rates, with the recent weakness of the US dollar relative to most currencies, we're currently tracking above the midpoint of our 2025 revenue guidance range, which I assume we're going to see that for a lot of companies in the next couple of weeks. And then if you basically want to look at the Netflix and chill effect, well, since the December quarter of 2019, look at all of the geographies: APAC, Latin America, Europe, Middle East, Africa, and UCAN. I mean, all of them have grown at a compound annual growth rate of above 10%. Some even here above 23%, which of course is APAC, smaller base, smaller number as well. But UCAN here, 11%. That's still amazing in my opinion. Netflix, I'm still kicking myself for not buying a lot of shares when Bill Ackman sold. You can look at my past videos. I've been extremely bullish on Netflix. I was just busy buying other stocks, still very, very focused on, back then, well, very focused on specific companies, and well, didn't have enough cash, to be honest, So yeah, lesson learned, you can't catch them all. We live and we learn. So all in all, that's about it. Leave your thoughts down in the comment section below about Novo Nordisk, Eli Lilly, and Netflix as well. All of that down in the comment section below, and do check out FinChat for 15% off. All the links are down there as well. See you all in the next one. Bye bye.